Hey everybody, Kimosabi here. We have the gold chart that we're looking at. This seems to be of interest for a lot of people now, so I'm doing a video as per requested, but be cautious when many are asking to say, hey, what's gold doing? Where's it going? That's often a sign of frothiness, similar to when you have Bitcoin running or any specific stock. People want information on it, probably because it's run so far. So be careful with invalidations. Know your invalidations. Don't just jump in just because something's running. It can certainly keep running, but look for your setups. You'll find setups on lower and lower time frames. As long as the trend remains up, um, yeah, keep trading it up. But I want to zoom out to the 1 month chart and just show the the overall price action of gold since the chart started, basically. Going from $20 an ounce to $38 an ounce, I think it was. And the markup that happened after taking the US dollar off the gold standard is just crazy. So, what can we learn or ascertain from this chart is when gold does run, how far does it run, usually, and the type of pattern that you see. What we do see here is just an ABC up, and we can measure those. If we were to take a trend-based fib extension, measure from high to the following low, you can see price went up to the 1.272 Fibonacci extension. So let's say price happened to repeat that same pattern. Price moves up from high to the low. The 1.272 gets you up to 13,400. And it's just how far it's moved historically with an ABC pattern up, ABC pattern up. You have a markup, backtest, and another markup, markup, backtest, and another markup. If you just repeat the same pattern, you're looking at a $13,000 to $14,000 gold price. If we take a box and just draw it from low to the high, and then see how much higher that went from that low, you broke the high. And then you take that from that low, and again, you broke the high. So from this current low, you could expect eventually to at least break the high. That'll get you up to 8,000. So initially I'm thinking 8,000, but historically speaking, this thing looks like 14,000 is the targeted range based upon how far this goes. So maybe this eventually pauses at 8,000 and then consolidates and then pushes up again. See, the trend is certainly up on a monthly, weekly. You're definitely in alignment to keep this trend pushing. Let's put a parallel channel on all the way from this low. We'll just follow this trend line up, and we'll just see this markup campaign that's been going on since Nixon took the dollar off the gold standard. You have a markup backtest, and now you're in this markup. Current target of this markup, you could get upwards of 8,000, so maybe it gets up there before it pauses and goes sideways. So this is in log scale. That doesn't look unreasonable. You can see the respect of that. You touch the midline of the channel. Now maybe you're pushing up to the next line of the channel around 5,000. That would actually make sense. Just shy of 5,000, maybe 4,900 something, and pull back a bit. Zooming into the 1 week chart. First things that come to mind here is the reaccumulation that happened there after a markdown phase. You had a reaccumulation. My volume's not on here, but I did verify the volume. It did look good, and obviously the price action tells you had a show of strength and a back test. And now you're in markup again after another reaccumulation / backup phase to the edge of the Greek and breaking out. Originally, when this was happening, I saw this as a potential distribution, And this liquidity grab here would have been a sell on first pass because you're taking all the liquidity, but any break above that liquidity grab says that you're going into markup phase. Keep that in mind when you see that. When you see liquidity taken and then price comes down and then it breaks above, that's a strong sign. Because after liquidity is taken, the market will be searching for much higher liquidity, as we can see here. So take notes of what happened in the past, because these patterns repeat constantly. Just draw a trend line from there. We're starting to accelerate to the point where we're not touching trend lines anymore, which gives you higher and higher angles. But where is price going? Where would the targets be? What we can do is from the reaccumulation range, take a Fibonacci extension and see how high we're getting here. So we'll take it from the swing low to potential for, say, a wave 2. Your wave 3 target is 4,900. That's very interesting. I could see that easily happening even after a pullback. Just looking at the legs matching, I think that's a valid target there at 4,900 before seeing a substantial or a more substantial retrace of some sort. Maybe get back down to 3,600 or something like that if it wants to go deep. Let's draw out what that could potentially look like here on a weekly. So this pattern here, I would see this as your ABC up from somewhere around the current area. Watch this leg to repeat here. Maybe get you down to 30, maybe 3,800 or something like that. Maybe it just cracks below 4K. Just to say, oh, maybe the top's in, we're back under 4,000. That's no good. To then take the next leg up to that 5,000. Then maybe you repeat this leg and consolidate there before a much larger push up sometime 2027. You could potentially push up and get up to 8,000, maybe 10,000 or something like that before consolidating again. But on a weekly chart, you have to think of the trend as higher highs and higher lows. You're not at risk of a lower low until close candles below like 3,000. So you're already $1,200 above that. A drop to 3,000, that wouldn't look good, but it would still be a buy because you'd match this leg and you could manage risk off of that. Currently, I wouldn't be looking for that much of a pullback until higher targets are reached. I want to measure this leg here and say where the buy setup would be if price does pull back from here, exactly here. If it goes higher, of course, the buy setup comes in higher as well. But if price was to come down this week, 3,867 would be a buy setup. Invalidation at basically 3,500. You don't want to see price below 3,500 to reach that 5,000 target. If price does not get below 4,000, then you may only be repeating this little small leg right here. This is your ABC. And you've still got a long way to go. And the targets could be crazy if this ends up just being this consolidation here, this triangle. If that ends up being halfway up this trend, let's take a measurement of that. I don't want to get too FOMO-ish here, but 7,000 to 8,000 would be your target before you even pause. It's possible, but I think with people asking about gold and wanting to know about it, I think we should start to slow down here, consolidate a bit. Probably reach the 5,000 coming here soon, though. Yeah, higher highs, your higher low comes in at around 3,800. I'd see that as a buy, and then break the highs. You're targeting 5 grand. Hi ho silver. Look at that thing go. Yeah, this is the entire history of silver, and looking at back in 1930s, you got down to 25 cents an ounce. Currently trading at $52. That's crazy. But Price did make a cup and a handle, and basically making another cup inside that handle. So this could be a repeating cup and handle, and a smaller little handle off of this cup. And the breakout should be enormous. You're talking hundreds of dollars for silver coming. How soon does it come? Probably 4 or 5 years away, but your breakout target 683 is the eventual target. I think I had a channel on this at one point, just looking at where that would end up, roughly speaking. You're talking 5, 6, yeah, somewhere around here. Yeah, 2030s, getting up to 600. So long term, silver looks good. Let's turn the volume on, and we'll look at this reaccumulation that happened here in 2017 to 2020. All right, so the volume is on, and you can see the reaccumulation range had very low volume, but it made a perfect structure. So you really have to zoom in to see the actual volume. But this is how prices accumulated on very low volume. They keep this thing quiet from 2014 all the way to 2019, and then the swing, or the spring, the Wyckoff spring here, has the same amount of volume as your selling climax. Let's zoom in to exclude the outer volume. Yeah, so your selling climax was right here. There's a secondary test, up thrust, and here's your spring. So your volume here, very similar to the volume there. Again, keeping things very quiet. And there's a show of strength on volume. And then the backup phase that came down on very low volume again. This is how price action ends up moving into markup phase. Now that you're in markup phase, you're getting a push up with volume. So that is promising. And you did break liquidity. So after breaking that liquidity, similar to what gold did, I would think this pulls back just a little bit. And the breakout of the breakout should send this thing into markup phase, similar to what gold did. So watch for this thing to maybe push up a little higher and pull back down and continue up. But this was a very nice accumulation. Here's your show of strength. Here's your backup phase on low volume. And markup should be ongoing now. You may have a reaccumulation inside of your markup phase. If you do get an opportunity to potentially buy a trend line low, say this swings up and pulls back down eventually to this trend line around 42 bucks, that might be your buy. And then this thing should be aggressively marking up. I would guess sometime around 2027 should be aggressively marking up. Currently on the monthly chart, this looks good. Let's zoom into the weekly. All right, price patterns here. I have a lot of legs here, these moves down, that should repeat over here. So we might be seeing $65 before you have any substantial pullback. I was looking at that as, yeah. Let's take a trend-based sort of extension from the Wyckoff spring low to the backup phase. $82 should be your target. So maybe as gold's consolidating and maybe having that one more push up into 5,000, you get an 82 read on silver. That would kind of make sense. And Elliott wave would say wave 1, 2. And this is wave 1, 2, 1, 2, 3, some 4. This is the extended fifth in the wave 3 there. So small pullback and a break up to 82. Then you should come back down and back test the $50, maybe $45 mark before pushing up for $215 eventually in 2027, 2028. That would look awesome. On the weekly, you have your higher high, and that's that much higher. So I wouldn't expect this thing to pull back much below $49 to $48 currently, using that as a stop loss. Let's take a trend-based extension measurement of this leg right there to that low, to the current closing high. Yeah, 48 would be a buy. 45. After 45, it's not looking good. $45, it's not looking as good. So I would say it has to hold 48 to continue being extremely bullish the way it is. So just at a glance looking at this chart, this leg could repeat there for this push up before reconsolidating here, something like that. Then push up into there, pull back, and then continue this eventually in 2027. Push up $100 and probably continue from there. This might get aggressive after that. Then you really get some blow off top action. But expect the weekly to maintain the higher highs and higher lows for the trend. So anytime you want to store some money in silver, just say, hey, where is my higher low going to come? Right now, I would just be matching those legs, expecting that push up. And then your higher low comes in right here. Higher high, higher low. And just continue up. And invalidation for right now is $45. $45 for me. After $45 would be hit or traded below, it's not looking as good. Then this looks like an ABC completed somehow here, and you're doing this, and that's all you get. And then a larger fall down. But until 45 is hit, I'd be expecting this to just continue being aggressively bullish, probably until $80, $85, maybe higher. GDX, the Gold Miners ETF. This thing looks very, very good for Peter Schiff. Yeah, consolidation here would be in order. This looks like it marked up quite nicely. You hit a volume kind of stopping bar here. Expect this pattern to repeat up here before marking up further to draw that out. So from here, maybe repeat that leg, kind of some sideways, pop up, down and up, down and up, something like that. Maybe getting up to 125, 130 aggressive target before it pull down. And then mark up again in 2027, 2028, $200. I think there's going to be some great trades coming out of the gold cycle low here. If you get a push up into the end of the year, pull back down to $100, maybe a little lower, maybe $90, get back to the range of the previous accumulation, and breakout, backtest, and resumption. And then miners should be doing pretty well for a while. And then it can consolidate around $200 on the GDX ETF. GDXJ, that one's moving. It looks like the same exact chart. You kind of expect a higher high, higher low to continue here, but this might be more explosive. Yeah, higher highs and higher lows. If this does end up being a blow off top, because it does look like it's really run quite a bit, look for a pullback similar to this. It'll get you down to 89, 87, 89. I can see that pattern being complete right there. Hold on, let me draw this out. That looks like a completed pattern. Expect this to pull down a bit. Something like that before magically going higher and then sideways to repeat some of this stuff until the cycle low. Something like that. If you're looking for trend to continue, you have your high, your low, higher high. Your higher low should be somewhere around 80 bucks. If it does come down there. If it doesn't come down there, you have to look higher for that pullback whenever it does come. But if the opportunity comes in the next few weeks, we'll look for that buy setup to continue higher. Platinum futures, this one we mentioned last time I was on with Camel Finance, we were talking about this being a buy because I saw that as a reaccumulation happening here. And that's perfect spring. There's a show of strength, came back down to, it made a higher high. There's your higher low at previous supports, and price is now in markup phase. So this looks good. Where's the buy? Well, you got a little bit of red coming here, so a little ABC down makes sense on a weekly basis here. Let's measure that from high to low, current high to the current low. 1,482 would be a buy. That would just back test that previous high before potentially pushing up for a one-to-one extension of that. Somewhere around 2,000 would be the trade from 1,482 up to close to 2,000 before things pull back a little more. See if we can get a trend-based fib extension target that makes sense. High to low. Yeah, so the one-to-one would be 1937, so you should expect the target to blast through there. If for some reason price gets aggressive and gets up to 3,300, then that would be wave 3. Your buy setup would be the 50% retrace. That from wave 2 low to the wave 3 high. Your buy would essentially be 1,600, getting back to wave 4 of lesser degree. If this is wave 1, 2, there would be 1, 2, 3, 4, 5 for wave 3, and then 50% retrace. Get you back down to wave 4 of lesser degree, for then a push up to $8,000 on platinum for a 5-wave impulse on that. I don't know how reliable the metals are at Elliott wave, but that would be what you'd be looking at. This wave 4 would probably extend a little longer, and then in the 2030s you get upwards of 8,000. So metal should be doing pretty well for the next 5, maybe 10 years. There's some that are saying the metals are just getting started. And I think they might be halfway through what they're going to be doing. They've done pretty well, but I think the most aggressive part of your rally/impulse is going to come at the last portion of it, which I think is going to be after 2027. It's just kind of the way the charts look to me, is you're going to have aggressive gains coming out of 2027. Which is that because the metals are just that much better, or is it because our currency is having problems? I think the latter, but we will see how things shake out here. But yeah, expect a 2,000 target roughly on platinum. Silver potentially getting upwards of 80 bucks per ounce. Gold, look for a small pullback and push of 5,000. These all look pretty good before a longer consolidation, maybe into a cycle low or a mid-cycle low coming towards the end of 2026. So last little push and get some sideways. Till then, let's see how it plays out. Keep them stops tight and have a good night.